I'll show you how to get set up on Blofin and start trading crypto on this exchange, both in the spot market and in the futures market, and I'll explain all the differences between them in this video. If you want to sign up, just press sign up in the top right hand corner. If you click the link below, you can get a bonus as of making this video, up to 10% cash back on your deposit. That may change over time. There may be some terms and conditions. If you click that link, you can see the latest offer when you're signing up. Hopefully you get some sort of bonus as a new user. Just sign up for an account, email address, and a password is all you need. Once you've got your account set up, make sure to go to your security settings before anything else. Your account icon here, and then account and security, and turn on some form of two-factor authentication. You can use Google Authenticator, which is the Google Authenticator app. You can download that. Then it creates a 6-digit code that refreshes every 30 seconds. You can link that with your account. You can also use passkeys, which are actually way more convenient. They just create a passkey on your iPhone or Android device, and then you can log in with your biometrics. Every time something important happens, like a withdrawal from the platform, it's going to ask you for that. So either do it with your biometrics on your mobile device, use Google Authenticator, or you can use a YubiKey as well. You've got to link one of those. I wouldn't link the phone number in case of SIM swaps or anything like that, but having that's just an extra step to make sure that nothing important happens without your say-so. I'll show you the trading fees as well before we start trading. For futures trading, maker fee is 2 basis points, taker fee is 6 basis points. These are very, very low, amongst the lowest in the industry. And then for spot trading, it's a flat 10 basis points for each. If you don't know what maker, taker is, I will explain that. I'll leave a timestamp below for that section if you want to know what the difference is there. There are some VIP tiers as well where you can get cheaper trading fees, but these are extremely low and amongst the most competitive in the industry. Blofin do have a buy crypto feature where you can buy crypto directly. So if you go to buy crypto in the top left hand corner and then put in an amount and a fiat currency that you want to spend, what you'll see here is that they're choosing a payment gateway for you. So Blofin don't have any direct fiat currency on and off ramps as of making this video. They're going to send you over to one of their third parties. So if you've ever heard of MoonPay, Simplex, Banxa, Alchemy Pay, there's a few of them. These are specialized companies in on and off ramping. So you actually go over to their site. If you press buy now, you go over to Simplex and then you put your card details in, you sign up for an account and you spend the money and they take that money, switch it into crypto and send it into your Blofin account to trade. Now, the problem here is that the fees are pretty high. You'll be paying around 3 to 4% in fees. You can see the difference here from US dollars into a US dollar stablecoin is pretty high. So there are other ways that people do this. For example, having another exchange in their region, which is a better fiat currency on and off ramp. So in G7 countries, something like Kraken or Coinbase tend to have much better fiat currency on and off ramps where you can send a bank transfer in. And then what a lot of people do is actually switch it into a stablecoin on that exchange and then send it out to exchanges like Blofin because the trading fees are way, way cheaper. And so once you've on-ramped into stablecoins, you can just trade on cheaper exchanges like Blofin. So if you want to on-ramp, you can do that, but it takes you over to the third party and the fees are pretty high. What I'll do is in the description, I'll leave a bunch of exchanges that I use with the currencies that they can on and off ramp. And also some tutorials on exactly how to do that. Once you've got stablecoins, you can trade on cheaper exchanges. I'll show you how to deposit crypto into Blofin if you do have stablecoins in a different account. Go to your assets page and then overview and then press deposit here. Now, these are your different accounts. So funding account, that's where your deposits go. Nothing happens in there. It's basically a holding area. And you can't do anything with your funds in there. If you want to trade them, just send them either into your spot account or your futures account if you want to trade in either of those markets. Now, Blofin use Fireblocks for custody, which are a huge custodian. They custody assets for, as you can see, many of the top exchanges and other types of business, which is good to know. So they have some security there. And then they also do proof of reserves as well, as you can see. So their ratios are well over 100% for all of their assets. I wouldn't trade on exchange without that, to be honest. So they do have it. You can go ahead and see this in your account as well. To deposit crypto into Blofin, we just need to know what asset that we're sending and on which blockchain that we're sending it from. So we're going to press deposit here. And Blofin is going to ask me, you want to make a deposit? Which crypto do you want to deposit in? I'm going to press USDT. Now it says, which network should I expect this asset on? So what we have to do now is go over to the other exchange that we have the asset on and choose how we're sending it. So I've got some stable coins on a different exchange and I'm going to send in some USDT, which is a stable coin, over from my Binance account. So I press withdraw crypto, select coin. This is the coin that I'm sending, USDT, and I'm going to choose the blockchain that I'm sending it on. Now, for Binance, they actually send on the BNB Smart Chain and the cost is free. So I'm going to use that one. And then we're going to go over to Blofin and make sure that Blofin accepts the same network. When you're sending crypto between exchanges, you just have to know two things: same asset, same blockchain. As long as it's the same asset and the same blockchain, you won't have any issues. So go to select network And I have to make sure that Blofin accepts the BNB Smart Chain, which they do. That's this one right here. So I'm going to click that one. Then it's going to give me my deposit address. This is my address for USDT on the BNB Smart Chain. So I'm going to copy that, go back into my Binance account and paste in my address here. And it's going to check it. And if everything is okay, it's going to give me the ability to withdraw, which it is right here. So same asset, same blockchain, and I'm going to withdraw an amount over from Binance into my Blofin account. Now, if you can't use the BNB Smart Chain or you're not using Binance or anything, all you have to do is figure out where you're sending from, same asset, same blockchain. So if you can use the Tron blockchain or Ethereum mainnet or any of these other ones, you can send same asset, same blockchain from one to the other, and you shouldn't have an issue. If you're ever in doubt about sending any assets, always do a test send first of a few dollars just to make sure that you're doing the right thing. But from here, now I've got some USDT in my account, I can go ahead and use this as value to trade into other cryptos like Bitcoin or any other of the supported assets on Blofin. You can see all the top assets are supported here. And we're going to trade in the spot market now. The spot market is where you buy and sell crypto. And so the crypto that you buy on here, this is your property. You own it and you can keep it in your account, or you can withdraw it over the blockchain to another exchange or to your wallet. So what I'm going to do is use my USDT to buy some Bitcoin. And down here, you want to transfer. So if you do have assets in your funding account, go to transfer here. You can transfer them from your funding into your spot account to go ahead and trade. And then you should have a balance here to go ahead and trade. So what we need to do is find the currency pair that we want to trade. On Blofin, you can see that all the pairs are USDT pairs. So you need this stablecoin, US dollar stablecoin. So should be 1-for-1 with the dollar. It's a dollar equivalent crypto version of the dollar essentially. And that's what we trade against. So we're going to be trading USDT against Bitcoin or ETH, essentially Bitcoin against the dollar. And you can see the exchange rate of them right here. So I'm choosing Bitcoin against USDT. And here is the exchange rate. This means for 1 unit of Bitcoin, that's how we measure things in crypto, as 1 unit, essentially, 1 coin. So 1 coin, 1 whole coin of Bitcoin is $96,848. Now, we can trade any fraction of a Bitcoin that we want, so we don't have to trade 1 coin in its entirety. But you can see that this is the exchange rate. And if we go down here, this is the order book. So the order book is literally everyone with their orders that they want to trade crypto at and all the prices, they're showing their orders to the market. Up here are sellers, and this is the cheapest seller. So this is the lowest price here, and these are higher prices. These are other people showing their orders saying, I'm willing to buy at these prices. This is the lowest seller, the cheapest seller. And then up here is the highest bidder or highest buyer. And so that's the highest price that buyers are willing to pay. This is the lowest price. And the difference between them is known as the spread. And you can see it's very, very low. It's maybe, a couple of dollars or something, not even that, right? It changes all the time. This in the middle, this is the mid price, or the last traded price, where a buyer and seller actually meet and they trade, and that price is the price that they traded at. So you can read the order book, and this moves around all the time. But we can see the price right now is this price here, and then we can go ahead and trade this price as well. There's 2 main order types in the spot market that we can use to buy or sell crypto: market order and limit order. Market order is when you choose the amount that you trade. So I'm going to switch to total here. You can switch to amount, and if you want to figure out or work out how much BTC you actually want to go ahead and trade, then you can go ahead and do that. Or you can just say, I've got an amount of dollars here, or USDT, and I want to go ahead and trade an amount. And then it's going to say, okay, we're going to go out into the market and we are going to trade Bitcoin. So we're going to sell USDT, buy BTC, and this is how much we're going to trade. And we're going to get the best possible price for you at the time you press this button. And so you can see the price is moving around, but we're a buyer. And so we have to match with the best seller, which is this one right here. So we get that price. And we take his order out of the book and we trade and we swap our USDT for BTC. So that's how a market order works, and that would be absolutely instant. The other way to do things is to use a limit order, and that is where we tell the trading system the worst price we're willing to take. And if the price is at that price or better, then it will trade for us. So if we go to limit, you'll see that now we can choose the price. So what I'm going to tell the system is I want to buy Bitcoin, but the maximum price I'm willing to pay per 1 unit is 90,000. And then I'm going to choose an amount that I want to trade with the slider here. And it's going to tell me and work out, well, if you want to pay this much per Bitcoin and you want to spend this much USDT, this is going to be the amount that you actually trade. So with a limit order, we can say to the system, I'm willing to trade, but I'm putting a limit on my price that I want to actually trade at. So for a buyer, Now I'm saying 90,000 is my limit. Now if I press buy and then confirm, you'll see that down here I actually have an open order. Now I've given this instruction to the system to trade. However, my price is too cheap. I'm saying do not trade if the price is 90,000 or above. Right? Or you can trade at 90,000 but not above 90,000. Only if the price is 90,000 or better than that, lower, please trade for me. So because it can't do that right now, because the price is 97,000, it's not going to trade. There are many buyers that are willing to pay more than me, and so no one's going to sell me Bitcoin at a cheaper price. But the system has this order in, known as an open order, and it's going to stay there until either I cancel it or it is met with a seller who wants to trade at the same price as me. And then it will actually go ahead and trade. Now what I'm going to do on the right hand side is cancel this, like that, and the order is out. Now I've not paid any fees there because I haven't traded. You only pay fees when you actually exchange assets and trade. So that's free of charge. I haven't traded anything because my limit price was too low. Now I can also put my limit price in something like 100,000. And if I do that, what I'm telling the system is buy immediately right now as long as the price is 100,000 or better. And you can see the price is lower than that. So if I press buy with an amount, what it's going to do is check. So I'm going to press confirm. It should check. So what it's telling me is, do you know that your limit order is above the current price? Did you make a mistake, basically? Because your limit order now isn't really a limit at all, because you've said basically just buy straight away. So it's just telling me now, did you mean to do that? Because your order is like way away from the price. So I can press confirm, and if I do press confirm, it's going to trade basically like a market order and just take the best seller or the lowest price seller that it can. So that right now isn't actually a limit order. It's basically going to trade as a market order if I want to go ahead and do that. But a limit order sets your limit and it won't trade at a worse price than you set your limit at. Now's a good time to explain the difference between maker and taker. So now that we know what market and limit orders are. So market orders, what we're doing when we choose a market order is we are saying we are going to take the best seller right here if we're a buyer. And that means we're taking someone else's order off the book. So these orders are people that are showing their order on the book using limit orders. And they're saying, I'm willing to trade around the price, not immediately. I'm trying to get a better price for my buyers or a better price for my sales. And they're showing their orders on the book. So when we use a market order, what we're doing is taking their liquidity out of the book. And we are a taker. So on Blofin, on the futures market, taker orders pay slightly higher trading fees. Now, if you're a maker of liquidity, that means you use limit orders and you put your order away from the order book. So if I'm a buyer, my price would be below this. And if I'm a seller, my price would be above this. I'm showing my liquidity. I'm adding my liquidity onto the book. And that means I'm a maker of liquidity. On Blofin, maker orders have slightly lower trading fees in the futures market. Now, in the spot market, maker and taker is flat 10 basis points. So it doesn't really matter anyway. And the difference in trading fees that you will pay is minimal, but that is the difference, and you do get a slight discount on maker orders in the futures market on Blofin. I'll quickly show you buying and selling on Blofin as well then in the spot market. So we're going to buy market order. I'll choose an amount here just to go ahead and buy. Press buy BTC, press confirm. Now this is a market order. You can see that was absolutely instant. And you can see now that I have been debited the USDT in my account, and that's gone straight into BTC as my assets right there. So if I want to go ahead and sell, let's go to sell here. Now I can choose a limit order, and let's say that my limit price is 98,800, something like that, and that's above the price. So I'm going to put all of my Bitcoin to sell here. Let's do 100,000. BTC sell, confirm. You can see I've got an open order again because my limit price is too high. I'm trying to sell at 100,000. The market's at 97,000, so I can't sell. So I'm going to cancel that. I'm going to go market order, market sell. That means I'm going to take the best possible buyer down here, press sell here, confirm, and that trades for me. And now you can see my assets have basically gone back to what they are. So the BTC is out and I've got USDT back. There's also some further instructions we can give to the trading system, so I'll explain these. Down here you can see these three letters. GTC means good till cancelled. That means your order will be good in the system until either you physically cancel it, like you saw me do, or it will trade. So either of those two things can cancel it. Other than that, it's going to be there working for you until you physically cancel it later. Post only. prevents you from making maker orders. So if you're using limit orders and you put in an extra zero or something, so let's say that I want to trade at 97,000, my limit order is 98,000. It's going to go through actually like a market order, right? Like a taker order at that point. If you press post only, that's going to prevent that happening. So if you use limit orders and have post only on, then when your order goes in, if it can trade immediately like a market order, it's actually going to cancel your order out for you. And that prevents any fat fingers, although there is the fat finger thing that you saw there as well that prevents me trading as well with a limit order that would go through straight away. FOK means fill or kill. So fill the order, and if you can't fill the whole order, cancel it. And then IOC, immediate or cancel. If you can't trade immediately right now, then cancel it as well. Again, you can just use a market order for that. Basically, it's going to trade immediately for you. So GTC is standard. And then if you don't want your orders going through as maker orders, taker orders, sorry, you want them as maker orders, you can use post only again, and that prevents that happening. Now let's look at trading crypto futures on Blofin. Now futures are different to spot in that we aren't actually trading crypto here. On Blofin, you can go to the spot market, you can buy Bitcoin, that's your property, you can withdraw it from the platform. With futures, we actually don't trade the underlying crypto. What we're trading is the price of the crypto, and that's that. So you open a position and you can benefit from the price going up or the price going down, and all you do is exchange the profit or the loss of your trade between when you open your position and when you close your position. And so that's why you can take leverage in futures as well, is because the leverage is based on the size of your order in relation to how much cash you have on the platform. With futures, we're not buying and selling the underlying crypto. We're trading the price of it, known as a derivative. It derives its price from the underlying asset, but all we're doing is trading the price. So all we need to do with futures is put an amount of collateral onto the system, into our trading account. For example, USDT. On Blofin, it's all USDT margin futures. Let's say I put $1,000 in. So I can trade with the market a trade size of $2,000, $3,000, $4,000. And that just means that my trade size is that much, but I still have the $1,000 there to pay for any potential losses. So if I make a $2,000 trade, I've still got $1,000 to pay for any potential losses. In the market, the price can move and I make my wins or losses on that. But if the price moves down, so for example, with 2x leverage, I'm using $1,000, I have a $2,000 trade open. If the price moves down 50% for that $2,000 trade, I'm actually wiped out my $1,000. So a 50% move with 2x leverage is doubled into a 100% move. Alternatively, if it goes up 50%, I actually double the assets that I have in my account as collateral. Right, so the leverage is based on the amount of cash you have in to fund your positions. So 2x leverage on the $1,000 that I had means that I can open a $2,000 position if I want, and that means that 50% move is doubled into a 100% move. So I'll show you how crypto futures work. All you need to do is put some form of collateral on the system to pay for any potential losses, and then they will let you open your trades. Now on Blofin, they just use USDT margin, which means you've got USDT in there. That's what you use to margin your positions. Then you trade and you take your leverage. You don't need to take leverage. You can use 1x, so no leverage, or you can move it up and up. And all that means is your trade size is much bigger. So 2x leverage means that with $1,000 collateral, you can open a $2,000 position. 5x leverage, you can open a $5,000 position. 10x, $10,000 position. But you've still got that $1,000 there to pay for any potential losses. What that means is losses are way quicker, right? So with 2x leverage, a 10% loss is like $200. With 5x, 500, and then with 10x leverage, a 10% loss is a $1,000 loss on your trade size, which wipes out your underlying collateral. So using leverage makes percentage moves much more volatile. So in a volatile asset class as well, right? So I can't recommend leverage to anyone that is new or beginning. In fact, there is, I think, a demo trading feature here, which you can use for the meantime if you are a beginner, just to check out, trading in the futures and if leverage is right for you. I personally do trade with leverage sometimes, but very, very low even. And I've been trading for, 15 years at this point. I traded stocks before crypto. But very, very low leverage because this is a volatile asset class, right? So leverage can be used intelligently sometimes, but yeah, can't recommend it for beginners. But of course, with leverage, we can use it intelligently, put some money on the platform and trade with the size that we would want to trade with. As of right now, all futures on Blofin are USDT margined futures. That means we put USDT into our account as collateral to margin our positions. Now that's quite simple because If you put $1,000 in, you know exactly how much collateral that you have to fund your positions. Your collateral value isn't changing. $1,000 is $1,000. It's the risk assets that change in price. So it's easy to work out how much collateral you have to fund your positions and how much loss that you can stand before getting wiped out on a particular trade. The other thing we need to know with trading futures on Blofin is this thing right here, known as the funding rate. So this is unique to crypto perpetual futures, which we're trading here. Perpetual meaning the futures contract has no expiry date, it's perpetual. And that is an issue for exchanges because this derivative product that we're trading is basically just a contract, right? Buy and sell, prices, exchange the difference. This contract isn't the underlying asset. And so this price is subject to its own supply and demand from traders. And that means that the futures price may be a little bit different to the actual underlying spot market price that's trading. Now that's not good because this is supposed to be tracking the price of Bitcoin USDT, this trading pair. Or if we choose here, we can choose other ones as well. It has to remain the same. And so what happens is all exchanges use something called a funding rate. And this is basically a fee that people have to either pay or receive in order to incentivize them to either buy or sell and to move the futures price in line with the underlying price of the currency pair that's trading. So this is how it works. Essentially, you want the futures price to be perfectly in line with the spot price at all times. But sometimes people come in and buy or sell and move the price around. So if buyers come in, what they do is they push the price up. And that makes it more expensive than the spot market price, which is no good. So what the exchange does is it turns the funding positive. And that means that these buyers that are coming in, they have to pay a fee in order to be long, going long. They have to pay that fee to shorts. And that should hopefully bring the price down because it's a fee that they have to pay, which disincentivizes buyers. And the fee that the short sellers get, that's an incentive for them to actually sell and take a short position, which brings the price back down. Now, if sellers are piling in, what happens is that the price of the futures contract is beneath the spot price. Again, that's not good, too many sellers. So the exchange turns the funding to negative, meaning those sellers have to now pay that fee to buyers. And so hopefully that brings it back up in line to the spot price. In any case, this is a fee that you have to factor in when trading crypto futures. And you can see it right here. It's exchanged every few hours or so, maybe every 8 hours on Blofin. You can see that here. And for right now, it's positive, meaning anyone that's long will be paying that fee to the other side of the order book, to sellers, when the countdown expires. And for the most part, you don't have to worry too much about this because futures trading is for shorter term trading, anywhere from a few days or weeks to maybe a year, 12 months, maybe something like that. And the longer you have your position open, if you're paying the funding fee, that is a cost to your trade. Now, for big pairs, you shouldn't worry too much. The funding fee may be 10%, 12% at an annualized rate, which isn't that much really. If the volatility is moving around and you're making profits, it's fine. But it is an extra cost that you have to factor into your trade and make sure that you can pay it. Now, sometimes the order book may actually be paying you that funding as well. For the most part with crypto, funding fees are usually positive, especially for Bitcoin and ETH, which means if you are long, you'll probably be paying it to the other side of the order book. Just factor it into your trades. If you've got a trade open for a few days or weeks, it's going to be mostly irrelevant anyway. In the top right-hand corner of the trading screen, go to your settings and then choose which position mode that you want to trade with. So this doesn't matter too much, but one-way mode means that you can only open a trade in a currency pair one way at a time. So if you want to go long and you're a buyer, you can go long with $1,000 worth, let's say. Now, what happens if you want to actually take a short position in that asset as well? So in crypto futures, you don't buy and sell the asset, you just open a long, which means you have to close higher to make your profit, or you open a short, which means you open high and hope for the price to fall so you can close your trade out at a lower price. So you buy low and sell high, you just do it the other way around, and so you make your money. So you're taking a long position or a short position. Now, which way do you want to do that? One-way mode means that you can only open one way per currency pair. So let's say I'm long $1,000 and now I want to go short $1,000. Well, I can't open a separate short trade. What I have to do is close my long and then go short and open a brand new trade that's short. So I can't open a long and a short at the same time. If you go to hedge mode, you can actually go long and short 2 separate positions at the same time in the same asset. So you can have $1,000 long, maybe have a $500 short. So your net position is 500 long. But you can have both of those positions open and add to them or take away from at the same time. With one-way mode, you're just long, and if you want to go short, close that position, then go short. Or you can of course reduce your long by 500 if you want as well, and then you are still 500 long. Again, doesn't really matter that much, right? You're going to get the result that you want either way, so it doesn't matter. I'll just use one-way mode for now. And then these other options here in settings, you can figure those out as you want. If you want any alerts or anything, I turn most of them off. The next thing we have to choose is if we want to trade with cross margin or isolated margin. So that's up here where it says cross. So isolated margin, this is going to mean that each of your positions is going to be individual, and the collateral that you have to fund that position will be isolated to each individual position. So let's say I've got $1,000 of USDT in my account, and I want to open a Bitcoin position. That's $200, so that's that. I tie up $200 in that position, that's isolated. Now I open an ETH position as well, $200. That's $200 isolated in that position. Let's say my Bitcoin position goes, out the window and I lose money there. It's not going to affect the collateral in my ETH position. Now, if you choose cross margin, what this is going to do is use all of the USDT in your account to margin all of your positions. So that means if I'm making a loss in my Bitcoin trade, my ETH trade wins. That's okay, right? Because the USDT is margining all of those positions. Also, the equity that you have in your account is important. So if I'm making a profit in a trade, that means that I have more equity, more account equity in that trade, more value there that's potentially liquidatable to fund any other positions. And that means if I'm making a loss in another position, it doesn't actually matter as long as I've got equity and collateral in the account. So which one do you want? Well, if you're more advanced, you'll be using cross and you'll just be margining all positions at once. But if you want to isolate each position, or if you just really are taking a risky position, for example, and you don't want that contaminating everything else, then use isolated. I use cross. I use very, very low margin, and so I just think of a portfolio of assets that I'm trading here. So I use cross, but you can figure that out as you want. Isolated, if you are just starting out, maybe you want to use that as well. Press confirm on what you want. Now you have to choose the amount of leverage that you're taking. So I recommend low leverage. And again, for beginners, don't use it, right? But I'll use 2x leverage here. And all that means is the leverage is in relation to the trade size and the amount of cash that you put down. So let's say I put $1,000 down with 2x leverage. That means that I'll be trading a $2,000 position, right? So let's say we want to use a market order here, and we're going to be using an amount, USDT, and let's say 200. Now what you'll see is that this right here, think of this as the trade size that you're trading with the market. So I'm trading with the market a position of $200. If I'm using 2x leverage, that means I must be putting around $100 down into the trade as a cost. You can see that down here where it says cost. Cost is the amount of money that I tie up in the position to pay for potential losses. The trade size is 2x that because I'm using 2x leverage. Let's go ahead and change the leverage to 3x, press confirm. Now you'll notice that my amount is exactly the same. I'm still trading with the market 200. The cost has gone down, right? I'm putting less down, same trade size. The leverage is in relation to the trade size and the amount of cash that I have in the position to pay for potential losses. Now, if I wanted to use 10x leverage, that would mean that I only put $20 down in the account, right? So let's go to 10x, confirm, and we should see that the cost now is $20. All this means, right, it's the same trade size with the market. All this means is with higher leverage, I have less cash to pay for losses, which means that my position gets liquidated at a smaller percentage move. With 10x leverage, a 10% move to the downside is going to wipe out my collateral, 10% of $200. With 2x leverage, I can withstand a 50% drawdown and loss without getting liquidated. So I can handle more volatility in the asset. Considering crypto is very volatile, very low leverage is recommended, unless you're just trading something quick and you just want to say, look, I don't need to put a lot of money down to fund this position because it's a win or lose trade, and I don't want to run the position for a long time. I'm happy to get stopped out on this trade if it does move down, but I'm looking to not tie up a lot of capital and open a decent trade size with the market. The amount of leverage you use doesn't necessarily increase your risk, and I'll show you why. So what we're going to do is go to the left-hand side, and let's say that I've done some technical analysis right here, and this is an area where I think the price may bounce from. Right, so this is an area where you can see the price has bounced from before, and we're pretty weak at the moment, but maybe we come into this, maybe we bounce around. In any case, what I'm going to do is take a long position here, and I think the price could get down to here, and I'm happy with that, but I don't want the price going any lower. And so when trading with futures, you can use a stop loss, right, which is I'm going to buy here, and I'm going to have a stop loss order here, and I'm going to stop myself out. I'm going to sell at a loss in order to stop further losses. So with that, I know that if I get in here and take a loss here myself, and that's something where I'm going to sell out at a loss, and I'm going to put that order in, that's let's call it a 10% move, right? Well, that means that I can use about 9x leverage and not increase the risk in my position whatsoever, because I am setting my stop loss at a 10% drawdown, which means I can use 2x leverage, but I can also use 8 or 9x leverage the same, and it's not going to increase the risk because I'll be stopping myself out before any liquidation would occur because I'm losing money and I can't afford the trade, right? So if I'm stopping myself out at 10%, that means that whatever the trade size is with the market, I can just put less capital down on the exchange to open that position. And that means that I can use that capital elsewhere. I can keep it in other assets. I can keep it in DeFi, earning some yield or something like that, or in a stable coin or whatever, right? And so I don't need it on the exchange. So using leverage doesn't necessarily increase the amount of risk that you have, but it can do if you're just using crazy high leverage and you're not actually using stop losses to know when you would get out of a trade anyway. But for some people, they do use these as a win or a lose trade, which is I'm going to go in here and it's either I lost that trade and I've got the direction wrong, or I'm just going to win that trade and I think that I traded up for another bounce. I'll show you a sample long trade and everything we can do once a position is open. So I'm going to use cross margin, 5x leverage, 200, and we'll open that. Right here, TPSL. When entering this order, you can put your take profit and stop loss orders in at the same time. So with short-term trading, for sure, if you're using leverage, I think anything over like 1.5x, 2x, probably put a stop loss in here. If you're trading shorter term, tighter stop losses. So here, let's say that drawdown, 7% or whatever, so 90,000. And that would be the amount that we lose. And we're going long now. So if the price falls and we get out, we would take a loss at 90,000. We would lose this much. That's my stop loss here. I won't put a take profit in for now, but we'll buy long. Press confirm, and that's in. So this is our position that we have. This is the currency pair that we're trading, the leverage that we took. This is the total order size that we have with the market. That's the price that we got in at. Now, if you open extra orders now, so if you go long again, it's going to give you an average price of whatever it is. This is the margin, which is the amount of capital that you tied up in this position, and our profit and loss, and our realized profit and loss. So profit and loss is the amount of P&L that you have in the open position. You can also close partially the order as well. And if you do close the order, you will realize the order and realize either a profit or a loss there. So what you can do right here is go to action. You can choose an amount that you want to close, and then it says close here. If you press that, it closes a part of the order, in this case 48%. We can also change the order and the stop loss and everything as well. So our stop loss is here. Let's say we move it down a little bit. We can just drag that, and you have a take profit here. You can move that. Now for take profit on a long order, that's above, and a stop loss is below. So that's our order here. Take profit, stop loss. I can cancel this out. So that cancels that order, and then you can go back and drag it if you want. These orders, these are tied to your position. So this is tied to the position that you have, and these stop loss orders and take profit orders, if you cancel or close this position, these also get removed as well. So what we're going to do is press close all, like this, and that closes your position out. I'll also show you how to take a short position. Now we can do this without owning any of the crypto because we're just taking a position on the price. So if we're selling first, that means we want the price to fall and go lower in order to buy back lower. So we buy low and sell high. We just do it reverse. We sell high first and then buy back lower later. So exactly the same, cross, 5x leverage, $200 position, we're going to put our stop loss order in, but this time we have to put it above the price, because if we're short, that means we've sold, and if the price rises, we lose money, right? So we're short, and if the price goes up, we're making a loss, so we want to get out at some position, right? So let's say 100k, so we'll put that in here, and the take profit is nothing for now, and we will sell short, press confirm, and as you can see, it's basically the complete opposite. So we have the order here, same currency pair, but you can see now it's red, so we have a short order. We are minus this. We're actually, essentially looking to buy back our order to close out the order, right? This is our profit and loss again, and if you want to close, you can close all, right? But we can drag this around. So now my take profit is actually below the price. We're looking for the price to fall, so we can buy back and close our short at a lower price and actually make the profit there. And if the price rises, so let's put our stop loss in at some point. So that would be up here like this. Okay, that would be our stop loss there. So take profit and stop loss, let's cancel that. Whatever, you can change that around. So what we're going to do is close the order. What we'll be doing here is buying back the order now to close out our short position. So close all, and then close out your position. If you are a new user to Blofin, I'll leave that link below. You can see what offers are there when you're signing up, and some much more in-depth videos down in the description on day trading and futures trading, plus a bunch of different strategies that you might want to actually implement. I'm James, it's Money ZG. Cheers for watching, and I'll see you in the next one.